The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey everybody, this is the Tax Lady, and this is our hour to talk taxes. And let's face it, we got lots of time. We got 12 more days until 2022, and we're going to keep you abreast of what's happening so that you can make those last-minute changes so that you don't overpay your taxes. And I'm joined in studio with Chris Fabian. Hey, Chris, how are you?
Good, Esther. Wait, I almost forgot. Hello, Esther.
Hello, Christopher.
Or should I say, Merry Christmas.
You got your shopping done?
Almost. Got a little bit more done today. Got, 5 more days, 6 more days.
So, do you have Gracie help you?
Gracie did a little bit with me today. She's, Gracie. And so she helped a little today, but I'm sure she'll want to help more later during the week going Christmas shopping.
Well, I'm done.
You're done?
I just write checks. It's much easier. And people seem to like it.
Yes.
I never mess on the size. Maybe the size of the check.
I was
going to
say the number of zeros.
Right. We're also joined in studio with Tiffany Fabian. Hey, Tiff.
Hey, happy Saturday.
Happy Saturday to you. So, it's interesting, the other day, for those of you that are Bible followers, there's something in Scripture that says that in the end times the beast is going to be come out with
a lion, body of a lion,
right? With the body of a lion and wings of an eagle. And do you know that they just installed in front of the UN a sculpture that looks like the end time beast, and the sculpture is called Peace and Security. And so Google it, and you'll be really surprised at that if you're a Bible follower. So it's very interesting.
Yeah, it's from Daniel 7 and Revelation 13. Right,
very interesting.
Yeah.
Okay. 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930 if you have any questions. We thought we'd talk about just before the end of the year, things that you need to be clear in your head about, because it's interesting. I was talking to somebody today who was saying that her granddaughter is a VITA volunteer, and they don't need to know much because they're dealing with people that don't have much income. And I said to the mother, these are the people that are going to make thousands and thousands and thousands and thousands of dollars. So you don't want to not know.
Yeah.
I mean, is that not true?
I mean, I see people who come in, oh, yeah, I went to VITA, and I look at their tax return and, sales of stock, some rental
But
property.
I mean, the people that are low income that might want to say, I think I'll save $75. I'll go get it done by free. You want to make sure, because with all these credits that are available this year, and the reconciliation of the stimulus and the child tax credit and the advanced child tax credit and the amount of money you got in advance and the daycare credits. I mean, you could some people could easily make refunds of $28,000, $29,000, $30,000
Oh, yes.
and pay nothing in. So, I mean, you just want to make sure. It's this year is unbelievable.
Right,
Oh, my
right.
God.
Yep.
Right?
It's crazy, and you have 3 years to make it up, and so if you after 3 years the refunds are gone, and so I seem to specialize in people who haven't filed for 8 or 9 years, and sometimes people have huge refunds, and after
you lose
3
it
years,
after
they're
3
gone.
years.
And so it's not a good thing.
So anyway, let's talk about, and again, we have 12 days before the end of the year. So anything you do in these next 12 days that we talk about can positively or negatively affect your tax return for 2021. First of all, if you didn't get stimulus last year on a dependent, you can get stimulus this year if you're claiming those dependents and they didn't get it, especially in the event of a newborn. And so what form do you do? Do you guys know?
The 8812.
And so the 8812 is what you would use to reconcile any stimulus money that wasn't paid to you so that you can get it. So just because you didn't get the $1,400 last year doesn't mean you can get it this year. Can you guys give me an example besides a baby where somebody else might not
Yeah,
have?
sure. So, say in a divorce, the dad gets to claim the child, and so the mom didn't get to claim it. So that means throughout the year, the dad's been getting the advance for the child tax credit, and so now the mom, it's her turn to claim the child. And
No, I'm talking about the stimulus.
Oh, did she?
Well, yeah. Well, that could be the same
Okay,
thing.
so
as
but
with the
but she was
sti-
talking advanced, and I didn't want to
Oh,
confuse
yeah.
people.
Yeah. Well, if in the divorce, if you didn't claim the child last year and you're claiming the child this year, you will get the stimulus for that child.
So even though the person that claimed them last year got the stimulus, this year, when you claim the child, if you didn't get the stimulus in 2021, because that's when the stimulus was paid, you get to get it again.
Correct.
Now, is there any income limitation?
For the stimulus, it is. Oh my gosh, they
Is it
keep
back to the
changing
80
it.
and the 120?
No, the 1400 was the
Last one, the
six-
third
That's
one.
the 75 and 150, right?
Yes.
75,000 single, 150.
Yep, yeah,
married,
75 to 80.
So,
and
so
then
can you
once-
imagine? Basically, you get $1,400 for those kids twice.
That's
Right?
Wow.
Uh-huh.
Yep.
So anyway, why don't we talk to Larry, who's down in Georgia? Hey, Larry, how
Hey,
you doing?
Larry?
Haven't-
I want to preface by saying I got your email, Larry, but I was not working at EG Tax yesterday, so I was going to address it on Monday. So I don't want you to think I was ignoring you.
all right, but that we never would ignore Larry. We love Larry. Hey, Larry, how can we help you, sir?
Well, God bless you all. Hey, Esther and Chris and Tiffany. I'm thinking seriously about doing a Roth conversion. Thinking seriously. I have an existing Roth account that's over 5 years, and I'm thinking of doing this conversion if I do it, at least over a 10-year period, and taking it.
You mean you want to do a little at a time over a 10-year period? Is that what you're saying?
Yes.
So how much are you thinking of taking per year?
I'd say, Esther, about 70% more than my RMD.
So how much would that be, Larry?
Okay, sure. So my RMD, I've got a separate account. I've got inherited. I'd say RMD about 1920. So,
Around 100,000?
no, 19 or 20,000 per year.
All right, 19 or 20,000. All right, and
And
do you have any other source of income besides your RMD?
yes, I do.
Okay, so if you're in the 10% bracket and you do 19,000, it's only going to cost you about $1,900 in taxes. So, but you're going to pay the taxes up front. So, what I'd suggest you do, Larry, is give us a call so we can take a look specifically at what you want to do so we can line up the numbers for you.
Yeah, I'm going to give him a buzz, or Chris is going to give him a buzz on Monday, one of us.
And go over everything. This way, you know. I mean, I don't want to over a radio show
Chris-
get into your
Right.
your underwear, so to speak. You know.
Chris knows the situation better. I mean, just really quickly going off the cuff, what do you
It
think?
all depends on his investments.
Right,
So
yeah,
Right.
yeah.
So you know, so looking at maybe $2,500 a year to move over 20,000. You know, you could do that. So, but you got to understand, you're paying it up front rather than later on. We don't know we're going to be here later on. Who's your heirs? All that kind of stuff you have to take into consideration. So, you guys going to call him on Monday?
Yep.
Okay, Larry. Merry Christmas.
Merry Christmas. All that good stuff. Love you guys. Speak to you.
Thank you, Larry.
Ditto.
Thank you.
You
All
know,
right. So the first, yes,
we're
sir.
I was going to say one thing too, though, with Roths. The government's trying to change Roths right now, where they want to make your growth taxable.
Well, believe
And
me,
they
with
can-
all that money sitting on the sidelines and they're hungry for money, they certainly did. And this is again for Larry's listening. They're talking about the appreciation being taxable and the principal not being taxable. So you don't know, but in the Build Back Better bill, it's not in there. It was in there originally, but it's not in there now. So I wouldn't want people to think that that's taking place. Why don't we take a break? 8030930, 8030930, star 930 on a cell phone, 716-8030930 if you want to text us. I'm Esther Gullius, the tax lady. I'll be back on the other side.
We are family. I got all my sisters with me.
Hey, we are family. We think of you as family, and we hope you think of us as family. Not like some business that you have to call in, put your text number, maybe they call you back next year. I mean, we want to help you. So,
You mean like the hotel you're staying at?
That's true. I went to a hotel the other day, and there was no person there. There was only a video
In the
And you had
lobby?
to talk into the box, into the lobby, and they gave you a key that came all out automatically, and that's all great if it works. If it doesn't work, but that's what we're moving to. They don't. Businesses are not going to pay the long dollar, and so it's much easier to put a guy in a box taking care of 20 apartments. 20 hotels rather than 20 people for one each. So,
Right. Well,
anyway, yes.
You want to hear something funny?
I do.
was with a client the other day, and he had a problem from Pennsylvania. We had to file a Pennsylvania return. We were calling Pennsylvania, and I get the phone number. We call, and after about 6 minutes of listening, all it was a phone system that just kept playing the same message. You couldn't opt out. It was an automated message. You couldn't talk to anybody. So I go on Pennsylvania's website, go to how do I contact you? The only way you can talk to somebody in Pennsylvania is you go to their website. You have to make an appointment for someone from Pennsylvania to call you back.
Everybody's
So-
still in the squeeze. They don't
Yeah.
have. It's just tough. And I just saw an article the other day. The IRS is still behind millions of tax returns that they haven't processed from 2020. and we're looking at 2021 in the face here.
I was talking to an IRS collector. He works for the IRS today. He said that they're hiring like crazy, but they can't train them fast enough. And then they can't get them computers because all the computers are gone from all the stores, from the supplies. So the IRS can't get them computers.
Okay, well, let's make me happy here. I mean, holy moly. Okay, I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. And we have Tom from Hamburg. Hey, Tom.
Hello.
How are you?
Very good. You guys are just top of the shelf. Amazing
Well, thank you.
information. Appreciate it. So I have actually two interesting problems, one of which I think will be highly interesting to a lot of people, and that's the 529 plans. So I've been very blessed and I have enough funds that I'd like to help my grandkids. And so I think last year I said, okay, I'm going to take $5,000 and put it for my 5 grandkids, each one. And then I think I discovered that I could only deduct $10,000 on my state. I was told, and then I found out nothing on the federal, I guess.
That's correct.
State? All right, so I'm needing some help to figure out, is there an alternative way, like the parents have 529 plans. So I guess what I could do is put $2,500 for each in the one that I've already started, and can I give, and I think, is that correct? I can give $5,000 or maybe even more per person tax-free each grant.
Okay, so you're limited to the 10,000 as a subtraction on New York State. All right, but you can give the money to your your goal is to put money into their 529 plans for college. You can put money into their 529 plans, but you're not going to be able to take it as a deduction. So, Chris, you want to build on that?
Yeah, I mean, the New York State caps it at $10,000 for a married couple, but you can put more in than $10,000. But what I would suggest, Tom, I would call Jeff Boron. He's a college planner guru, because there's something where you may actually want to give it to your kids and have them put it in the 529, then you put it right, you being the custodian of the 529, because the colleges look at it different when it's under the grandparent compared to when it's under the parent.
Right.
And then
But
do
the
you
thing
even
is,
pay
the
state
maximum,
tax?
from a tax standpoint, you're limited to the 10,000.
Right. So you're going to save about 600.
But from a planning standpoint for your kids, your grandkids' education, you don't have that problem. But Jeff Boron really is a great guy from a logistics thing, like a planning kind of thing. If you want to get the biggest bang for your buck for college and for filing grants and things of that nature, we suggest Jeff Bourne would be a great person to talk to.
Yep. And you can call him at 633.
1515.
Yep.
Okay, that's an easy one.
Okay, now what's the second question?
Second question is I sold a couple of houses this year. So I have, and I didn't have a mortgage on one. So I got like $170,000 that I want to do something with. And my own view is that I can make more than my mortgage. I got a couple of small medium-sized mortgages, but one is at 2.75%, and one is at 3.25%, and one is at 3.75%. And so I'm trying to figure out. I think I can make a whole lot more than that in the stock market, frankly, even on just straight dividend funds, dividend stocks. Even like something simple like Verizon, you make 5%, 5.5%, and Verizon stock doesn't go much either way, up or down a whole lot. So you're not much risk of your principal. In the meantime, you make 5.5%. So to me, it kind of seems like I should do that rather than pay off even the 3.85% mortgage. But I'm wondering, am I missing something in terms of
Okay, so the houses you sold were
Rental.
either of them your personal residence?
No.
Okay, so they were both investment?
Yep.
Were they the kind that you buy fixed up and flipped? Or were they long-term rentals?
I owned them like about 3.
Were they rentals, Tom?
Yeah, rental.
Okay, so you're going to have to claim all that depreciation that you claimed on them,
Right.
and plus your gain. So you're going to end up with some substantial capital gains this year. Okay, and it's going to be limited to 20%, depending upon what your income is. Okay, so that's number one. Number two, your mortgages that are relatively inexpensive. If you want to take that money that you made and pay off those mortgages, that's great, because effectively that's what you're going to get, that return of the interest that you would have paid. But obviously, if you want to put it into some fixed dividends, like you're suggesting, you would make an extra 1.5%, which is also good. And it would give you that liquidity, and your appreciation would be more than the interest you're paying. And for many people, unless they change the SALT deduction, you're going to find that you're probably not itemizing anyway.
Right, you're correct. Incidentally, I have a lot of capital gain or losses, I guess. Capital
Well, there you go. You can offset the one with the other.
that offsets the stuff that I.
And if you got more, sell them before 12/31, and you can buy them back in 31 days if you like that stock.
It sounds like his situation is really complicated. I had a client who just sold a large rental, and we just sat down together on Thursday and went through all the numbers. So either a phone appointment or coming in, I think
Yeah,
is.
I mean, if you want us, there's no
no
charge. We can
charge.
do that with you. But certainly, if you can make 5 or 6%, but you're paying 3%, you're making 3% on borrowed money, which is a no-brainer.
But I think you should plan on what the gains are going to be, the taxes are going to be
Right.
for those rentals.
Yeah, I'll give a call.
All right. Thank you for calling. Merry Christmas, Tom.
Our phone number is
You all. Great job.
Yeah, thanks. Our phone number is 632-7886.
That's our corporate phone number.
Yeah.
Okay, let's go quickly to John. Hey, John.
Hi, thank you. I inherited a IRA from my mom. She passed away in 2017.
Okay.
Her RMD, she took her RMD that year.
Mm-hmm.
I have not taken any withdrawals from that. I was under 59.5 in 17. Now I'm over 59.5. Are there any penalties because I didn't take any withdrawals? And do I have the 10-year rule or 5-year rule?
She passed away in 17.
17.
So you have the 5-year rule. So you have to the end of 2022 to close out your beneficial IRA.
So you'll end up with a lump this year.
Okay.
And when you inherited the IRA, the 59.5 rule for penalty didn't apply to you
Correct.
because you were under compulsion to take the money out over a 5-year period.
John-
So had you done annuitized it over that 5-year period, it would have been taxable but not subject to penalty.
Do you understand what Chris said by the lump rule? Do you need that broken down a little bit more?
Can I take half this year and half next year?
Yeah, as long
Yeah.
as it's totally distributed.
That would work.
Okay.
Okay.
She also gave me another one, but it's had a low end RMD every year, which I have been taking, but they both fall under the 5-year rule.
No. If you can you have 3 choices.
Right.
Before 2020, it was you could take
If
it.
you inherited before 2020.
Right. You could take it all out at once. You could take it out over 5 years, or you could annuitize it over the rest of your life. So the one you've been taking small amounts, if you leave it as annuitized over the rest of your life, you're going to be fine. The other one you have to now, because you haven't taken anything out in the 3 years prior, you have to take it out by the end of the 5th year.
Great. Thank you so much. Have a Merry Christmas.
All right. Thank you,
Merry
John.
Christmas.
Merry Christmas.
Okay, so you want to grab one of the texts Jeff, before we go?
we
Or do you
gotta-
think we're too tight?
The music is playing.
The music is playing. We got a break for news. I'm Esther Gullius, the tax lady, 8030930, 8030930, star 930 on a cell phone. We'll see you on the other side of the news.
We are family. I got all my sisters with me.
Hey, this is Esther Gullius, the tax lady. Looking at Christmas here a week from today and New Year's 2 weeks from today, and then it's 2022, and so we'll be doing those 2021 tax returns. We got some information this week from the IRS. They'll be opening up anytime between January the 15th, 16th,
January.
and February the 16th, depending upon if they like you. So that makes it interesting. But I will tell you, you have to be really careful, because if you file your return early without having the right information, in other words, you took a kind of a guess at how much advance money you got, stimulus, or your unemployment, it'll just hold up your refund. And those of you that have been waiting since the beginning of time, trying to wait for your refund, you know how long of a wait it can be. So do yourself a favor and make sure you have all the right forms. Now, if you're somebody that got the advanced child tax credit, what form is it that they got to get, Chris? Do you know?
It's a letter 6419.
Right, and it's going to say how much they paid you in advance, and that's got to be in your reconciliation of the advanced child tax credit. And if you don't do it, it's just going to hold up your refund.
Exactly.
And remember, if you got unemployment, they don't send you the form. You know,
No,
you would
they
think
don't.
that the state of New York would want to send you the form, but for some reason, you have to contact them and you have to download the form yourself.
On
So you
your
got to make
portal.
sure you go to your unemployment website and you have to log in using your password, which most everybody has already forgotten for some reason, and you download that form so that you know how much unemployment you got.
Yep. That's
Right.
right. Do you want me to read one of the texts?
Yeah, read it.
And then we'll go to Mike. My child will be starting their online marketing business full time in the beginning of 2022. Is it sufficient enough for them to go online and pay federal quarterly taxes and state quarterly taxes? Or do they have to sit down with an accountant from the get go when they don't really know how much they will be making from this business?
No, and so sitting down with an accountant is a good thing anyway, because your child who's starting their own business needs to know, should they collect sales tax? Should they send the sales tax in quarterly? What's deductible? How to keep track of all their bills? This is what's really, really important. Whether they make money or lose money, they have to do certain accounting procedures, and if they should hire employees, how to do the payroll, et cetera, et cetera. they don't have to pay estimates unless they're making money. So if they don't make any money, then they don't have to make any estimated payments
Yeah.
because they're not going to owe any taxes on that money.
And what you mean is they might be making money, but on the other hand, they've got expenses like cell phone or the laptop or the paper
Internet,
or
PayPal.
Or
the business
travel, right?
insurance. Yep. And so the net is what you have to worry
Right.
about.
So you might start off making 100,000, but when you take all your expenses into consideration, you paid 110,000 to make the 100. So you've lost 10,000. So you don't have to pay estimates because you aren't going to pay taxes. And the important thing is to know what's deductible so that you would know if you have a net profit,
Exactly.
right?
Yep.
Good question.
Okay. You want to do another tax tip?
Yes, Esther. It says, file the return for a deceased relative who passed in 2020 in April 2021. They have not received their refund. What can be done?
Well, if
well,
it was
Tiff, you're the guru in that department.
Yeah, and so a decedent return, so returns are really behind already, like 8 or 9 months. And now if it's a decedent return, it goes to a different department. I've talked to the IRS, and that is even shelved off another 3 or 4 months. But they're welcome to call me before tax season gets roaring here.
And that's what
We
I'd
can check on the
suggest. If
status.
you're somebody that is still waiting and waiting and waiting and waiting, Tiffany is so good at waiting with the IRS, and she will help you, and there's no
Well,
charge for us to intercede on your behalf.
And the reason why is usually they do it from home, and so I'm on the other end doing work, and we're holding together, and
right, they're cooking, they're
Yep.
making muffins, and you're cooking
tax
stuff and-
returns.
right?
right,
Yes.
and if it went in paper, you could be looking another 8 months because of how
That's right.
far behind
And
they are.
do me a favor this year, if you're listening to us, please don't file a paper return. I don't care who you use. Do yourself a favor and don't file a paper return. It's the last return they look at.
Yep. Yep. And they got to catch up first.
And I mean, if you don't believe me, if you if you filed a paper return, you probably know you never have gotten your refund yet. So you know I'm not lying to you. Okay, let's go back to the phones. Let's talk to Mike. Hey, Mike.
Hi, Esther. Hey, I've got a question. I've got a rental property, and before the end of the year, I was thinking about like prepaying for some windows that I could replace. Would that help my situation or not?
Well, I mean, if you buy the windows and you're with the intent of installing them, then that would be an expense against your rental property. But again, you have to depreciate them, so it's going to be a teeny, weeny deduction.
Oh, okay. Because I thought there was like some $2,500 deal that.
The
Well,
safe
but aren't
harbor,
windows more than $2,500?
Yeah, but the safe
And
harbor,
it's-
it has to be depreciated over.
It has to be for depreciation under 20 years.
Yeah, and so windows are
Right.
27 and a half
Right.
years.
Oh, so it really doesn't.
Yeah, because you're going to get the 12th month. You get one. You get 1/12 limited to the month you bought it, to the day you bought it. So you'd be getting like, oh my gosh, I don't know, 1/20th.
And you don't
of,
qualify for the
It
safe
would be
harbor.
very small, believe me.
And you
So
don't-
I mean, I wouldn't run out for that.
Oh, okay. Well, that really helps a lot then.
Okay, thank you.
Good question.
Yep.
Bye bye.
Bye-bye. Okay, let's go back to our little list here again. 8030930, 8030930,
How about we
star
got-
930 on
We
a
got
cell phone.
oodles of text.
Okay, all right, give me another text.
Okay. My son filed his taxes on his phone. He doesn't believe.
On his phone?
Yes.
Okay.
He doesn't believe he got the federal stimulus checks. Is there any way he can get them now?
Yeah, if he didn't get it last year, he
Yes.
can get it this year. You can do the reconciliation when he does his 2021 return.
Yeah.
Right. But I would really look to see if that the only reason he was filing. Did he have another part of a refund? Did he get that refund? We really got to look at the whole picture, not just the
Right,
stimulus.
but if he
side.
didn't get it, he can get it.
He
Right?
can. Yeah.
But he's got to put it on his 2021 return.
as long as he's talking about stimulus 3, if he's talking
Right.
stimulus 1 and 2,
That's true. It's too late.
You know, it's bad enough when you're doing a tax return on a computer, let alone your phone. It's really, really complicated. I was with somebody who I was helping them, and they said they did their return on their phone. So this seems to be a new trend.
Well, because it all sounds so simple.
Uh-huh.
I mean, I can remember, gosh, I think 40 years ago, when I was with some other company, And we used to send shoppers in to shop to make sure that they were doing a return correctly. So the lady that we shopped, she didn't know that it was a shopper. And so when we got all done with the return, she did a short form and it should have been a long form. And so we called her up and said, you know, you did not a good return and you have to, why didn't you itemize? And she said, because back in the day I was young, you are a young girl, you don't know anything. Why would you complicate up somebody's tax return? I said, because it saved them $2,000. That's why. And she said, oh, you don't know anything. Well, anyway, that was her last day at work. But the thing is, keeping it simple, stupid may make you happy, but you don't get all the benefits. And there are all kinds of benefits and refundable credits in the law this year that makes the other years pale by comparison.
Yeah, and so this person that did it on the phone, they had self-employment, and so had they put the self-employment on, they would have gotten earned income credit for his
Right.
3 kids, and so
Yep.
just think knowledge.
And so that's, what, $8,000 error, something
Yep,
like that?
Yep, correct.
And it's not just an $8,000, it's not like an $8,000 income, it's $8,000 in their pocket,
and
money.
now they get the child tax credit.
Okay, we got,
Yeah.
what else? What other credit?
You want to go?
I mean,
one of-
other tax.
I will do this for you. I will do anything because of this. We expect you.
No,
I'm
it says,
confused.
good afternoon. We had $11,000 refund on our 2020 federal taxes, mainly due to spreading the taxes on a COVID-related IRA distribution over 3 years.
Uh-oh.
Because of this, we expect to owe over $6,000 for 2021. Should we make a partial payment to the IRS this month to avoid a potential penalty for underpaying our taxes?
Smart for thinking that.
Yeah, it is smart, but unfortunately, they should have been doing it all year long.
Yeah, the IRS likes their money in equal periodic
Right.
payments throughout the year.
So yes, you will avoid 1/4 of the underpayment penalty, depending upon how some of this other stuff works out. So if you have children, you may get the great big child tax credits, and that'll cover everything. So again, why don't you give us a call on Monday? Again, there's a message here. Call us before the end of the year so we can help you out so that you would know. And there's no charge. So 632-7886, and we'll take a look at how
were you
everything
gonna
all
say,
fleshes
Chris?
out.
Actually, too, another thing you could
And
do.
especially if they got $11,000 refund, they might break out even this year. They might not owe anything. You know?
Well, it depends if they had the withholding. But another thing they
right.
could do is put the money back in the IRA, because they're allowed up to 3 years to do that
That's correct.
with this COVID stuff.
So that would be a good idea. Like, for instance, if they found out they were going to owe $5,000 and they were able to put the money back into the IRA, their money is now back in their column, and it may be better for them to borrow the money to put it in, right?
Yep.
Especially if they have a home equity.
Yep, exactly.
Okay. All right. Any other
That was a
texts?
really good point.
Traditional or Roth to lower my taxable income, and until what date do I have to put in next year?
April 15th, if you have wages, right?
And probably traditional.
And traditional is the one that lowers your taxes. The Roth doesn't lower it at all. It just, at some point in time, it won't be taxable, maybe.
Right.
So
Right.
we're saying traditional.
Right, we're saying traditional. Okay, who else we got on hold?
We got Steve from Lancaster.
Hey, Steve.
Hi, Esther. I have a question, a little confusing from last year as well, regarding the charity giving of the $300 and the $600 for couples.
It's 600 this year. Last year was 300.
Last year was 300 because
Right.
the letter I got just recently regarding it. It's not exactly clear whether it's 600 for marriage.
It's 300 per person, 600 for a couple if you paid it. They're not just giving you 600. You have to have given at least 600, and you're not itemizing your deduction and taking it on the Schedule A. So if you and your wife are filing a joint return, then you can take up to $600 as an adjustment. If you're single, it'd be limited to 300.
And last year it was limited even for couples, 300.
Last year it was limited to 300 for everybody.
That's where my confusion comes in. So thank you for clearing that up.
You're very welcome.
Appreciate that. Thank you.
All right, Merry Christmas. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. Okay, let's go back to our list here. Now, in the past, you did not get an earned income credit if you had disqualified income of, I believe it was $1,150. This year, disqualified income has moved to $3,650, and you can still get the earned income credit. So those people that maybe had rental property with no mortgage and they had income of maybe $2,000 on their Schedule E, and even though they had qualified children at home but they couldn't get the earned income credit, this year they'd be able to get it. So, or maybe you had interest or dividends or sales of stock. So, so your disqualified income for the earned income credit has moved to $3,650. So that's a good thing.
Yep.
And of course, we want to talk about the child tax credit. If you have children under the age of 6 and children under, then the credit that they're giving you is $3,600 refundable. If you have children under the age of 18, up to 6 to 18, it's $3,000 refundable. And provided that your income isn't over $80,000 single, $160,000 married filing a joint, no, 75 single, $150,000 married filing a joint return. If that's more than that, then you go back to the old. There's a phase out, by the way. If it's more than the phase out dollar, then you go back to the old way of the earned income credit, which would be $2,000, and that would be income up to $400,000 married filing a joint return. But the refundable thing is for people with income under $150,000 with children under the age of 18 or under the age of 6, where they'd get the $3,600.
Correct.
Right?
Yep.
And the other thing is, if you, especially with children that are being fended off one to one parent, 1 year to the other, even if the other parent got the kids last year and this year they're on your return, you get the credit.
I'm going to read a funny text before we go to break, and after break we'll take Lee.
Okay.
It says, I doubt it, but could donations to Texas Wall be a deduction on the federal return? Yay, Texas.
Well, it'd have to be a qualified 501c3. So it'd have to be so the people that are doing the wall in Texas should start a not-for-profit, called the TexasWall.com or whatever they do, and it has to be non-political. So they can't be saying we hate Democrats and we hate Joe Biden or something like that. And if that's the case and it's a qualified 501c3, it would be deductible.
Right.
Yep.
Okay,
Right?
We'll go to break. And
All
then
right,
talk
let's go to
Lee.
break. I'm Esther Golias, the tax lady. We'll talk to you on the other side.
The bills make me wanna shout. Kick your heels up and shout. Throw your hands up and shout. Throw your head back and shout. Come on.
Hey, I'm telling you, I am a Bills lover. I love them so much that I can't watch them. So, I mean, talk about a sick puppy. Last week when they were really, really losing, I was so depressed. And then I heard that they were doing something good, and then it was overtime. Then I was really like nuts, and then they lost. But
Yeah, it's like
I love them.
you got to look with one eye open and your eyes covered.
And you don't want to be superstitious, but you think, well, maybe if I stand on my left leg,
Oh, we do
and
it.
maybe if I don't put my right leg down and I rock back and forth, I mean, you do some really crazy things, hoping they'll win.
Yes.
But anyway,
We got Lee and Tony on the phone.
all right, hey Lee, I'm Esther Golias. How can I help you?
Yeah, Esther. I have two separate 401k plans. Both of them contain company stock. Next year, I have to start doing my minimum withdrawals. And ordinarily, I could just let things take their course and have them sell the stock as it goes. But I'm interested in finding out if it buys me anything to go with long-term capital tax rate on these 401k plans.
No. So Lee, anything inside of your pension plan, any pension plan, 401k, IRA, stock or not, no stock, you don't get capital gains anymore. Everything in your 401k or your pension plan is just whatever they liquidate. That's what the value of the stock is. And when you take it out, you take it out as ordinary income.
Okay, the reason why I'm asking is I did contact the IRS, and they said that I would have to sell my cost basis and pay the taxes on that immediately. and then the ones that the company kicked in for me would I could defer selling that until a later date. So you're saying that that's not the case?
No, so the total value of your 401k is whatever's in your 401k. That's what is going to be taxable when you take it out, unless it was a Roth 401k. Chris, you want to
sure.
help me with this?
Yep. So the money that you put into your 401k was you didn't pay tax on. So now it's growing and it's growing and it's growing and it's growing. So when you take it out, it counts as ordinary income. So capital gains.
And when the company put it in, you didn't pay taxes on it.
Okay.
And so everything in there, I mean, I'm assuming you didn't pay taxes on it. So everything in there that everybody put in, you and the company, when you put it in, you got a tax deduction for it. All right. And you didn't pay taxes on the appreciation. So when you take it out, however you take it out, selling the stock or not, it's ordinary income.
All right. So that's not an option then to use this. When does net unrealized gain apply? Because that is in the tax statutes.
That's for with your regular investment accounts. That's not your 401k.
Right.
Your 401k is always ordinary income.
Okay. So that's the...
Now, had you had a basis in there where you paid taxes, you could take that out tax-free if you had paid taxes, but not on money you just put in and didn't pay taxes on.
Okay. Well, thanks for helping me out.
All right. Hey, thank you. I'm Esther Goulias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. And we have another caller, right?
Tony.
Hey, Tony.
Yes. I'm 90 years old. My taxes are paid, all that. I was questions about the stimulus.
Yeah.
I got a check on the first one back in 2020.
Right.
And I haven't received any others, and I was wondering, am I entitled to any others?
You should have been. Yep.
Okay.
So why don't you call Tony, call Tiffany on Monday, and she'll do the research for you, and she'll check your bank account to make sure you haven't received it.
Unless your income was too high.
Yep.
Right. Did you have large income, Tony, over $75,000?
No.
Okay.
No.
Yeah, so call Tiff at 632-7886, and she will help you.
The first stimulus was $1,200, the second was $600, and then the other one was $1,400.
Right.
Okay.
Okay, Tone?
That's Tiffany?
Tiffany.
Like the jewelry store.
Like the jewelry store. Because she's such a diamond.
Thank you.
All right, Merry Christmas, Tony.
Sure.
All right, let's go back here to my list in the last few minutes.
Somebody put a text. How can I listen to replays of EG Tax?
Oh, all you have to do is go to our website.
Oh, there's a caller coming.
We got our podcast down there. You can. It's a good thing to go to sleep with, right?
Oh,
Anyway.
I went to sleep to listening to the Epstein trials. It was crazy. Or there was a 60-60 that somebody did in Australia about. Sometimes you just want to go to sleep to certain things, right?
I guess.
Uh-huh.
I think of something better to go to sleep with than that.
Uh-huh.
We got another
The
caller.
other thing is that many people aren't aware of that when you're married filing a joint return, when you're married, at the end of the year you are the married filing joint or married separate. And I wanted people to know that sometimes if your spouse has left the house, has been gone for the last 6 months, and you have children that live in your home that are your dependents, for tax purposes, you're considered unmarried. And there's a whole bunch of reasons why that's important. You guys want to say why?
Yeah, sure. Then you don't have to do married filing separate, and you get the benefit of doing head of household. And so when you do head of household, that opens a door for potential earned income credit. And so it's just a much better tax status. And then you get this
all
wonderful
kinds of breaks,
thing,
right?
all these
you get
credits.
all kinds of breaks. So if your spouse has been gone since the end of June and you got kids in your home, even though he or she does not want to file a joint return with you, you say, I don't care, because I know I can file head of the household. Right?
You want to do John before the end of the show?
Yeah, well, yes, we will. Hey, John.
Yeah. I got a question. Your previous caller talked about the $600 deduction on a federal.
For charity.
For charity.
Is that also on the state?
No, it's only on the federal.
Only on the federal.
Right.
Yeah, remember a couple years ago, New York State basically got a divorce from the federal. So whatever the federal does doesn't flow through to the state unless they voted in themselves,
Right.
and the state hasn't yet.
Oh, so that won't be showing up.
Right. So it's actually you carry forward the figures from the federal and you add back then that 600 onto the state as an addition.
Oh, you had it back in?
Because you have to take the adjusted figures from the federal, which includes that $600 subtraction, so you have to add it back in.
Oh, okay.
Okay? Don't file a paper return, John.
What?
I know you wanna. Don't do it.
Don't file a paper
Don't
return.
file a paper return.
Oh.
All right. Merry
And
Christmas.
should we try
John.
real fast
All
to
right.
get
Want
Chuck?
to make sure, speaking of John, who is over the age of 65,
Chuck
people
is
now,
on line one.
Pardon me?
Chuck is on line one.
Okay, but if people over the age of 65 this year that work could get an earned income credit. That's another thing. And stimulus money that you didn't get, you can do it with reconciliation. You got to make sure you do that. And let's see. You don't have to claim income from your dependents this year when you're figuring out your whether for the medical.
Yep.
That's
Okay.
another thing.
Chuck, we're about out
yes.
of time. Chuck.
We're
Chuck,
out of time.
Can we
Well,
talk
you
to
can
Chuck?
talk to him off the air, right, Tiff?
Okay.
Yep. We'll get Chuck off the air.
All right, and then let's see, purchase assets for business. If you're self-employed right now and you're looking for a deduction, like I just saw somebody yesterday who just bought a truck and he was moaning about having to pay taxes. I said, you bought a truck? Your truck is a big asset. So it's all tax deductible. And make sure you take your deductions from your trust. If you're somebody that is the beneficiary of a trust, to make sure that the trust doesn't have to pay taxes because they pay it at a much higher rate. Right?
Yep.
Well, next Saturday, are we in?
No,
next
we
Saturday?
are not.
They're kicking us to the curb.
Yep, they're going to play
We're gonna sing
Christmas music.
Christmas
all day.
music. Gee, you guys are going to miss us. We're going to miss you. Don't forget our podcast. You can go to Taxes Done Right by EG Tax. And if you have questions, just give us a jingle. Go to our website at egtax.com. Until actually maybe New Year's Eve.
2022.
Yeah, we won't see you. God bless you guys. Thank you for everything. We wish you the best for this holiday season. Merry Christmas. Bye-bye.